Why is everyone suddenly talking about Trump, crypto, and the US debt problem? The truth is, this isn't just another headline. It's about the financial backbone of the United States and whether or not it can hold up under the weight of trillions in obligations. Let's start with the debt spiral. The US government owes more than it ever has in history. And here's the real kicker. It's not just about the total number. It's about the cost of keeping that debt alive. Interest payments alone are exploding, eating up a massive share of government revenue. Think about it. Before the government can spend a single dollar on schools, healthcare, or infrastructure, it has to pay interest to creditors. And with higher interest rates, that bill only grows. If nothing changes, the country risks reaching a point where it's borrowing money just to pay interest on old borrowing, a vicious cycle with no easy exit. Now, this is where crypto enters the conversation. Advocates argue that Bitcoin, with its fixed supply, could act as a hedge against the dollar's decline. The pitch is simple. Unlike the US dollar, you can't just print more Bitcoin. For people worried about inflation, that sounds pretty appealing. And whether you love it or hate it, crypto has become more than just an investment fad. It's now a political talking point tied directly to the nation's financial future. The very idea that a former US president is publicly endorsing crypto shows how mainstream the conversation has become. Then we have Trump's push for alternatives. He's been vocal about bringing gold and crypto into the spotlight, framing them as safe havens against reckless spending in Washington. His message resonates with people who feel left behind, who see their savings eroded by inflation and don't trust the system anymore. Investment. By aligning himself with assets outside the traditional banking system, he's tapping into a powerful narrative. If the dollar is weakening, why not back your wealth with something the government can't manipulate? But here's the reality check. That as attractive as these alternatives sound, the risks are enormous. Crypto is still highly volatile. One tweet, one regulation, one market panic, and the value can swing wildly. Gold, while historically stable, isn't easily transferable in a modern digital economy. And shifting too much weight away from the dollar could destabilize not just the US economy, but global markets as well. The fact is, the world still runs on dollars, investment, and there's no quick or painless way to change that. So when you hear people talking about Trump, crypto, and the debt problem, understand this, it's not just politics. It's about the financial foundation of the country. Investment. The debate isn't simply about what's safe to invest in, it's about trust, stability, and the future of money itself. The US debt crisis has become the spark, crypto is the wild card. And Trump is the megaphone making sure everyone pays attention. The debt spiral is one of the most pressing financial realities facing the United States, and it's far more than just a large number that keeps getting bigger. On paper, investment. The government currently owes over $30 trillion. But the real concern isn't the total. It's the cost of keeping that debt alive. Every time the government borrows money, it issues bonds and promises to pay them back with interest. For decades, interest rates were historically low, so the debt seemed manageable. It was easy to refinance, roll over, and keep the machine running without much visible strain. But the landscape has changed dramatically. Good investment. Higher interest rates mean the cost of servicing this debt is ballooning at a speed most people haven't fully grasped. Imagine having a massive credit card balance where your minimum payment suddenly triples overnight. That's essentially what's happening to the US budget. The impact of these rising payments is profound. Before the government can spend a dollar on programs Americans rely on, whether it's Medicare, Social Security, or defense, it has to pay interest to creditors. In fact, interest on the debt is rapidly becoming one of the largest single line items in the federal budget, rivaling or even surpassing essential programs. That's money not going to education, not going to infrastructure, not going to lowering taxes, but simply flowing out the door just to keep lenders from walking away. The most dangerous part is the feedback loop this creates. To cover growing interest obligations, the government borrows more, which creates more debt, which then leads to even higher interest payments in the future. It's a cycle that feeds on itself and becomes harder to escape with every passing year. And this spiral also weakens the government's flexibility to respond to crisis. During recessions or emergencies, borrowing has always been the tool of choice. Stimulus packages, disaster relief, wars. These are funded largely through issuing new debt. But with interest costs eating up such a large share of revenue, the ability to take on new obligations shrinks. That means the next major crisis could hit harder, and Washington might not have the financial room to cushion the blow as it has in the past. Even worse, if investors begin to doubt America's ability to manage its obligations, they may demand even higher interest rates to lend money, which would accelerate the spiral further. For everyday Americans, the consequences are not abstract. A larger share of government revenue spent on debt means less investment in services that directly impact people's lives. It can mean higher taxes in the future, fewer benefits, or reduced public investment in things like transportation and healthcare. It also affects markets and confidence. As global investors watch the US debt climb, investment, some begin to question the long-term strength of the dollar. If that confidence slips, it could have ripple effects across savings, investments, and even the cost of living. At its core, the debt spiral is a slow erosion of financial stability. It doesn't happen in one dramatic moment, but gradually undermines the government's ability to lead, provide, and grow. It's like a silent tax that compounds with time and forcing future generations to inherit not only the bill, but also the reduced freedom to make meaningful choices about the nation's direction. The longer the spiral continues unchecked, the fewer options remain for a soft landing. Crypto has become one of the most divisive and fascinating parts of the modern financial debate, especially when tied to the US debt problem. For years, traditional finance was dominated by the dollar, bonds, and gold, but Bitcoin and other cryptocurrencies have entered the conversation as something entirely different. Supporters believe crypto could serve as a hedge against inflation, government overspending, and the weakening value of the dollar. The core argument lies in scarcity. Unlike fiat money, which can be printed endlessly by central banks, Bitcoin has a fixed supply of 21 million coins. That limitation makes it fundamentally different from the US dollar investment, which loses purchasing power whenever more is pumped into circulation. For people watching the government borrow trillions while printing more money to cover deficits, crypto feels like a lifeline, a way to protect wealth from the erosion caused by inflation. The appeal of crypto is also tied to its independence from traditional systems. Banks, governments, and regulators don't control Bitcoin in the same way they control dollars. Transactions can be verified and secured through decentralized networks rather than central institutions. For some, this decentralization represents freedom from a system they see as broken or corrupt. They argue that as the US debt climbs and trust in the government's ability to manage money declines, more people will naturally seek out alternatives. In this sense, crypto isn't just an investment, it's a statement of distrust in the existing financial order. However, it's not only ideological. There are practical reasons why people see crypto as a potential safeguard investment. Over the last decade, we've seen inflation rise, interest rates spike, and the purchasing power of the dollar weaken. For younger generations especially who've grown up during recessions and financial crises, crypto looks like an asset that isn't tied to government failures. When you add the fact that large institutions and even some governments are exploring or adopting crypto strategies, it begins to feel less like a fringe idea and more like a genuine part of the global economy. This momentum fuels the belief that Bitcoin could one day stand alongside gold as a store of value, particularly in times of debt-driven instability. Yet the story isn't without risks. Crypto's volatility is legendary. Prices can soar in one year and crash by more than half in the next. That kind of unpredictability makes it difficult to imagine replacing or even supplementing the dollar with Bitcoin on a large scale. Critics argue that if the US debt problem escalates, relying too heavily on such a volatile asset could amplify financial instability instead of solving it. Still, despite these concerns, the growing conversation around crypto shows how deeply people are searching for alternatives. It's no longer just about speculation or chasing quick profits. It's about finding a safeguard in a system many believe is on the brink of collapse. The fact that this debate is now part of mainstream political and financial discussions underscores just how much crypto has become intertwined with the nation's most urgent economic challenges. Trump's push for alternatives like gold and crypto has added an entirely new layer to the conversation about America's debt crisis. Traditionally, presidents and political leaders have spoken about fiscal responsibility in terms of budgets, taxes, and spending cuts, but this approach is different. By publicly tying his economic message to assets outside of the traditional financial system, Trump is signaling to millions of Americans that the old ways may no longer be enough. His emphasis on gold plays into its historic role as a safe haven during times of uncertainty. For centuries, when paper currencies lost value, people turned to gold as a hedge, something tangible and universally recognized as valuable. By putting it back in the spotlight, he is reminding Americans that the dollar itself is just paper without faith and backing behind it. But the more disruptive part of his message lies in his endorsement of crypto. To hear a former president promote Bitcoin as part of an economic strategy is almost unthinkable compared to just a decade ago. When crypto was dismissed as a niche experiment, Trump has reframed it as not just an investment, but as a shield against government overspending and reckless debt accumulation. This resonates with people who feel left behind, who've seen their savings eroded by inflation, and who no longer trust Washington to manage the nation's finances responsibly. For them, hearing a political figure champion assets outside of government control validates their concerns and encourages them to take alternative investments more seriously. His approach is also deeply political. By aligning himself with gold and crypto, Trump is tapping into the growing frustration many Americans feel toward the traditional financial system. Rising costs of living, higher interest rates, and a sense that the game is rigged against ordinary people make the promise of alternative stores of value extremely appealing. His message essentially says if the dollar is being weakened by debt and printing, then it's time to turn to something that can't be manipulated by central banks or policymakers. It's a powerful narrative because it blends both fear and hope, the fear of a collapsing financial system and the hope that assets like Bitcoin or gold can provide security outside of it. At the same time, this strategy forces the broader conversation into mainstream politics. When a leading figure speaks about crypto and gold in the same breath as national debt, it pushes these ideas out of fringe circles and into dinner table discussions. Whether people agree or disagree, they are now paying attention. It also pressures traditional institutions to respond. Banks, regulators, and policymakers can no longer ignore crypto when it's being positioned as a potential solution at the highest levels of political discourse. In many ways, Trump's endorsement has accelerated the normalization of these alternatives, making them central to the debate about the future of money and the sustainability of U.S. debt. And his push is less about presenting a complete roadmap and more about framing the fight the dollar, weighed down by debt, and versus assets that claim to offer independence and resilience. While the idea of turning to gold and crypto as shields against America's debt problem sounds appealing, the risks tied to such a move are massive. On the surface, both assets seem to offer a kind of safety net. Gold has a history that stretches back thousands of years as a store of value, while Bitcoin promises scarcity in a world where governments keep printing money. Investment. But digging deeper reveals that adopting these alternatives on a large scale could introduce complications that might be even more destabilizing than the problems they are meant to solve. Take crypto as the first example. Investment. Bitcoin's fixed supply is its greatest strength, but it is also its biggest weakness when it comes to functioning as a national level solution. Unlike the dollar, which can be expanded or contracted based on economic needs, investment. Bitcoin's rigid supply means there's no flexibility during crisis. Imagine a recession where the government needs to inject liquidity into the economy to keep businesses alive. Crypto cannot be adjusted to respond in the same way. Then there's the issue of volatility. The price of Bitcoin can rise or fall by double-digit percentages in a matter of days, sometimes even hours. And that kind of instability makes it nearly impossible to use as the foundation of a modern economy that relies on predictable pricing, stable contracts, and trust in the value of money. Gold, on the other hand, offers stability but lacks practicality in the digital age. Its value is steady over long periods, and it has been a reliable hedge against inflation. But in a world where most transactions are done digitally and at lightning speed, gold presents logistical challenges. Transferring ownership, storing it securely, and ensuring fair valuation all add layers of friction. For a global economy that demands efficiency, relying heavily on gold would slow things down in ways that could harm trade and everyday commerce. Beyond the practical hurdles, there is also the geopolitical risk. The U.S. investment dollar is not just America's currency. It's the backbone of international trade and finance. If the United States were to pivot too aggressively toward alternatives, it could send shockwaves through global markets. Allies, investors, investment, and institutions that rely on the dollar's stability might panic, leading to capital flight, higher borrowing costs, and reduced confidence in America's ability to lead the global financial system. The ripple effects could hit everything from foreign investment to the purchasing power of American households. There is also the problem of accessibility and inequality. While some Americans have the ability and knowledge to invest in crypto or buy gold, many do not. A sudden shift toward these assets could deepen the divide between those who can adapt and those who are left behind. Instead of solving the debt crisis, it might create a new layer of instability within society itself. The reality is that while gold and crypto can play supporting roles in a diversified strategy, relying on them as primary solutions carries serious risks. They cannot replace the dollar overnight, and any attempt to push them too far, too fast could destabilize both the American economy and the global financial order in ways that are difficult to predict